Hi everyone, welcome to the channel. Today I'm going to show you 5 high quality dividend stocks that are way undervalued. We are going to check the dividend score for each stock and also the valuation with the help of fast graphs. At 5th place we have eBay. I think eBay doesn't need a big introduction, but it's a multinational e-commerce business with operations in over 30 countries. Yeah, they have just recently begun to pay a dividend, and the payout ratio is actually just 19%, and they are buying back shares, and they have a great return on capital. Let's take a look at the valuation. Here in fast graphs we can see that the orange lines, which is the earnings, is very solid. Actually, if we go back 15 years, we can't see a single year with negative earnings. But recently it peaked a lot, up to over $80, but now it has dropped to in the 40 range. So if we project out to it to trade at its normal valuation, we can expect an annual return of almost 25%. Number 4, and that is Stanley Black & Decker. This high quality company has a combined dividend score of 6 out of 10, nice sales and earnings numbers, a bit high debt, but dividend is very nice at the yield of over 3%, a relative low payout ratio, and they are a dividend king with over 50 years of increasing their dividends. Let's take a look at the valuation. And here in fast graphs we can see that they are not faring that well in recessions, but other than that they are trucking along quite fine. And same here, they have been plummeting their stock price from 210 down to under $100. The light line, almost white line here, is the dividend, and you can see it's just increasing every year for over 50 years. So here, if we project up to its normal PE, we can see a total annual rate of return of over 31%. At number 3, we have Altria Group with a combined dividend score at 7 out of 10 points. MO has efficient management, they are great at returning capital. Of course, they have pricing power, which is important now. Same here, they are buying back shares aggressively. But the sales and earnings are slowing down a bit, of course. But the dividend yield is over 8% on Altria Group. This is also a dividend king, over 50 years of growing their dividend. Let's take a look at the valuation. Here in fast graphs, we can see Altria Group. It's almost like a straight line, the earnings. And here mid 2017 we could see the stock price got a bit disconnected from the earnings, but right now it's the other way around. It seems way undervalued, a PE of only 9, but if we project out to late 2024 and for it to trade at its normal PE, we can see a total annual return of 33.6%. At number 2 we have Comcast. Yes, you heard right, Comcast. It's not like Netflix and YouTube and other streaming services have been eating Comcast alive. They are faring very well, and a dividend score of 8 out of 10 points, extremely nice sales growth numbers, and also here 4 check marks in the dividend region, nice yield, extremely low payout ratio, and they are growing this dividend at a double-digit rate for now 13 years. Let's look at the valuation. For Comcast, we can see almost straight line, fared well in the last recession. They started to pay a dividend at 2008, and the dividend has been extremely consistent after that. But here we can see that the price has been disconnected from the earnings a bit, and if we project out to its normal PE, we can look at the annual return at 39.4%. And last, at number 1, we have HBQ, a dividend score of 8 out of 10 points. Extremely nice sales and earnings numbers, and also the dividend yield almost 3%. Payout ratio low, 21%. Very nice growth rate here also for their dividend, and they have been raising it for 12 years now. Buffett bought over 100 million shares of HP now in 2022 Q1, and let's see why. Here we have HP. This is a bit more cyclical, faring very well in recessions, but they had some troubles in 2011 to 2015. But right now we can see that the stock price has been extremely undervalued at only a PE of 8, and if we project it to be at its normal valuation, which is PE 16, we are looking at a total annual rate of return of over 47%. So here you have it, the 5 best undervalued dividend stocks with high quality. Leave a comment if you agree or disagree with the list, and if you found this informative, please also hit the like button. See you next time, guys. Hej då!